Hello, hello, and welcome to December 7th, our prayers and remembrance of Pearl Harbor, 1941. With that said, the alphas fall back to SLB at 89%. Here is the chart. There's 89% for SLB. They were 102 last Friday, so there's a little pullback right there, but we're still in profit, and that profit will be going up against the rock of 48.76. Indicators are not too bad. We're still in good, strong, good positive area. So we'll be keeping an eye. If the stop is here, the stop is there. We pick up whatever profit it can. Remember, rule number two, protect profit. Rule number three, take profit. So we take the profit at 100 ROI and just break that rock down to a pebble. That said, let's go on to RTX is our next leader for the alphas. And there it is, right there. And it's still down here at the 30-day moving average. It only achieved the 30 ARI back on November 19th. So it's but you see, it's ever so slightly creeping up. We are in 55%. So once the 30-day moving average closes in on the price, then we're going to be we'll be making some kind of profit and get a point on the scoreboard. We are looking at an 896 on the ode. So now it's at 665. We can get that 100 ROI. Just might be able to take out that 896 come the end of the week or next week. Takes us to ATVI. ATVI is still at this far point. It's not a nice move. It's at 26%. So we just need another 4% to get that 30 ROI so we can move the stop here to the 30-day moving average. Remember, the middle stops apply to whatever strategy you apply. Here is the 30-day moving average, therefore will be our middle will be the 30-day moving average. Over at Tigers, they'll be on the black price line. Finishing up here, going on to Adobe. There's Adobe, and Adobe is still it's at far point. It's at 20%, another 10, and we'll be able to do our trigger our 30% protect profit rule. So remember, 30% is the protect profit rule. Take profit is at the 100 ROI. Going on now to BMRN, and there it is. It's at far point. So it's had pushback. Remember, we still have a warning track here. So if the close falls below that 30-day moving average, that will become the official stop out. Until such time, we'll be playing it out, and then they're only at 2%. That does conclude the alphas. Let's go on now to the Tigers. And here at the Tigers, we have XLE is in the lead. So XLE. And there is XLE. XLE is here on the black price line. They are in the black price channel, and that's what the BPC stands for, black price channel. That they're here. That's their middle stop because this is a price channel strategy, and they did get awarded a 30% ROI on 11/23. So right now it has an inside candle inside a strong candle, and the parameters aren't doing too bad. So again, it's in the right direction, and it's 300 against 1947, the year of my birth. Going on now to XX SPY, going on to SPY, and here at SPY we have it's moving up on the green price channel. It hasn't got this 30 ROI as of yet. Now this is a little more of info I'm tracking. When this trade gets first set up, it's calculated that had the price come all the way down to the green price channel while it was still down here in the basement, it would have been 100 ROI loss on the trade. Now we're only looking at well, a lot less. 350, and it's SPY is at $15. So the close was, the close is right there. 364. So it's about $14, 50 delta, about seven. We could lose maybe $7 on this trade, which would still be significant because we paid 597. Okay, moving on now to UAA. This was our darling a few weeks ago, and it's doing what it can. So it has not achieved this 30 ROI as of yet for this trading session. So 19 more percentage points to go there. And now it takes us to Verizon. And at Verizon, we are running there in a Verizon. Remember, this is price channel. And price channel is the green price channel, not the 30-day moving average. This is why it's very, very important that if you are trading 2, 3, 4 strategies in one account, you got to be very much precise as to what strategy you're playing. This is why I have my notes. PC price channel, 30 MA, 30 moving average. You might say, okay, I'm trading wayward candles, which would be, that would be a wayward candle right there. It's a doji, but look at the long legs on both sides. That's considered a wayward candle. This is your standard doji here. Then you have spinning tops in the middle, which are not really significant in anything, and you have big candle moves right there. So that's how you can be able to read candlesticks. There's a lot of strategies out there. You have to find which one's going to work for you. Going on now to T minus. It's the last of the positives for the Tigers, and it's has not achieved this 30 ROI as yet. The old notes, remember, I do keep my old notes. Right there's an old note from July. Why? Because I can use the same superstructure, and all I got to do is just punch in the current data to what applies in the current date when it's initiated again. So this stays over out of the way. This, yes, T minus owes money to the alphas also. So that's why that's there. If it didn't owe any money to the alphas, then that would be taken off to avoid confusion. Okay, that is a conclusion of today's report for the losers become winners, with alphas falling back to SLB at 89%, Tigers at 14, alphas at 16. And reminder again, we are closing these two trade strategies out on December 31st. I am getting very excited to see about what strategies we'll be achieving from the mastermind going into for January 2020 for the contenders of 10x. Yes, we are going to be looking for the 10x. That's what our objective for 2021. It's out there. It's been done. I have a lot of good war stories from various traders who have done it. The thing is finding our secret, their secret, do it. All right. With that said, I thank you very much and take care. Bye-bye.